Hello guys, glad to have you on board again. Today we'll make the first beginners level podcast today. So the early feedback I've got from intermediate and experienced level ones are pretty much positive. So I expect somehow the same for you guys. But anyway, you are an important part of the community, so don't hesitate to send your feedback. If you have suggestions or whatever, don't forget that you can send them right from Discord channels, not in here. I don't have a look at the YouTube comments. Anyway, some other users get to read those comments and they can somehow send the feedback to me right into Discord. So even if you write them down in here, it's no big deal. Anyway, so let's get it started. What we do in here is just dedicated content for you. That's much better, I think, because instead of just blindly talking to many different experience levels, I rather like to target to your own specific needs. So obviously, as you're beginners, your level of expectation is pretty high. You want to take care of tough stuff, difficult trades, whatever, as actually you should be avoiding them and sticking to something that you can actually manage. Not control. The goal in here is really not to seek for control. Remember that this is exactly what your beginner's biases will lead you to, trying to get control over the market. That's absolutely bad thing. Don't go down this road. It's probably going to be causing most of your beginner's mistakes. But once again, some people need to fall to just somehow learn to walk. So no big deal. Don't blame yourself if you make some mistakes. That's just absolutely normal. It's basically, most people just learn this way, and me included, of course. So I don't remember all my mistakes back on those days, but I simply remember that I was doing quite some. So anyway, what you need to do in here, remember, is that it's just like you're starting to build a house, and what you need is to build a solid ground first. You're not starting building the walls. Like, yeah, many people tend to believe that that's about it, because when you build a house, you feel like you're moving on as you start building the walls or putting a roof, whatever. It makes the thing like rational, visible. You can start projecting yourself into this house like you just built walls, and you say, oh, that's my beautiful bathroom coming along the way. So you can think about things about a positive future. And obviously human beings are meant to be seeking for happiness. So obviously you want to rush things up because you want to prove yourself you can be a trader, and obviously that's a misconception. You're not there to seek being a trader in just a few months. You're here seeking to become a trader for years. So you need to start rational. Like, just think about building that fucking house. If you want to start with the walls, and if you still haven't been making a solid ground, then you're probably having problems down the road. You might be building a house, yeah, sure, but this house, if you can manage to make it hold together, then it probably won't be doing this for a long time. So solid ground first. I know it's not really fancy to like doing this first, but it has to be done anyway, and you rather like to do it step by step. So not necessarily gorgeous trading at the beginning. I know you might want to, but it's not going to be pretty, all right? Like I told you, the easiest trade you're going to start managing as you're beginning is the range trade. Obviously, no trend, no market excesses. That's just purely fucking boring. I mean, I was there to make money, and the guys just make me a boringly stupid routine. Yes, that's exactly how it is. First they destroy your dream, and then you eventually start to trade. So yeah, I'm sorry, I don't do this. That doesn't make me happy to just tell you that what you're going to be what you have to do is just boringly repetitive and stupidly respecting rules, because that's exactly what it's about to be with that range trade. You won't be able to brag yourself with your friends saying, oh, damn it, you heard about oil, I caught the market top, I'm a good trader. That's not what you're going to be doing. What you're going to do instead is most likely, like, you don't know shit about whatever is going to happen. No one does. And the only thing you're going to be doing is looking for a positive risk-reward ratio in a ranging structure. So looking for a risk-reward ratio, that might sound easy. Yes, that's the 76% fib rule. Like, basically, you're risking 1 to get 3. Yes, that's a good risk-reward ratio. But still, if you just apply that simple rule every fucking where, that's not going to work. all right, because there are some contexts in which that rule can apply, and some context in which you're obviously going to end up fucked if you try to apply it. So contextualizing trades is absolute necessity. Contextualizing a range is probably the easiest thing to do, but the most complicated thing to do for a beginner, simply because ranges are noisy, and noise seems to be real complicated for a beginner, pure and simply because you're trying to read that just like you would try to read a book you don't nearly understand in a language you don't even know. So you're looking at price and you don't even know what that means, you don't understand how price moves and stuff like that. You'll learn that through time by putting your hands on the dirt and stuff like that, but until then you still have to start at some point. So don't try to read something you haven't learned. It's simply worthless and an excessive expend of energy that doesn't bring any return. So what you do instead is, like I told you, if you can't force yourself to have a look at those prices and trying to read them like this could mean something or this could mean something, just fucking delete them. And there you've got more than enough information to process if this is a range or not. All right? Because once again, I figured it out. All right? This isn't an area of study I basically never figured out myself when I was learning. I didn't had any of those things. I didn't even thought about deleting the prices, but I thought it would have helped me back in those days, just like I think it can really significantly help you as well. Because in here, you don't see prices, but you can definitely see the fucking range. So I'm just going to change the colors. Let me just see if I've got one. I think that was the intraday. Give me a second. All right. Yeah, that's much better. Same informations, obviously, but just darker colors so you're easily going to understand. So first of all right, as you begin, remember that few sets of things I just gave you, all right? Think about solid ground. Don't think about fancy building walls or putting a roof to a very unstructured house. So start rational, all right? It's not going to be pretty. You can't brag yourself. It's not going to bring self-esteem. It's just going to teach you trading. So prices, put them fucking away. If you can't stand looking at price, just delete them. You know how to do this. I think I gave you the tip into the PDF manual. Otherwise, it's pretty fairly easy. What you do is that you get in here, all right, where you got candles. You're gonna use hollow candles. I mean, you can use any other one, but you have to use this one. All right, and you're gonna be doing is double clicking on prices. All right, and as you get in here, you're gonna put everything transparent: candles, borders, wicks, whatever. All right, you put it all transparent, 100% transparency. All right, and then as you'll switch from candles to hollow candles, you basically will have prices and invisible prices. All right, considering it that way. This is just a simple tool I've been creating to show just the 30th last bars. All right, so we see whatever happens anyway. All right, but it's just, that's not necessary. All right, just put it. Well, anyway, I'm gonna give you the code so you can just pause that fucking video, copy paste it. And all right, so if you want to have the later 30 bars, that is pretty fucking simple to code. That is what you need to put in there, all right? You can simply create that indicator. If you want to do it, you rise up the Pine Script tab, you just type whatever I gave you in here, you click save, you give it a name, you click save, or add to the charts, all right? As simple as that, and you'll get the latest 50 fucking bars. Let's assume you just want 25 bars, you change that value, and that's done, all right? Pure and simply, if you want to just have the same thing like I do this, that's fine. Sorry, I'm just going to remove drawing tools. All right, so next thing is that as you just deleted the price, you're going to need to remove momentum. All right, so 2 clicks in the main area just puts the momentum down. All right, it's basically expanding the chart section. All right, another double click and it brings back up. So there you have the best possible thing to highlight ranges, all right? Because you can easily figure out the fucking context you've got in front of you. It's really, really simple. Listen to me really carefully. That's what you're going to have to apply, all right? What you need to care about is looking for range context. A range context shows up into two different contexts. So after a trend, or after a failed trend, All right, when a trend failed, you know there's a range. When a trend terminates, you know the market will range the new price area. Though, that's the things you might want to have a look at. But first of all, you're not trying to search for the end of a trend. You're not taking reversal trades. Just like, do you care about that? Oh, you would like to, right? The market is rising, so you'll say, all right, I need that trade. I want it. No, you don't need it, and that's definitely not what you're looking forward for. You want to get this trade? No, you shouldn't get it. You should nearly search for this trade, all right? But you would like to get those trades, all right? That's definitely what your eyes is seeking for, because people tend to believe reversals is what brings the most amount of money. Yes, it is, but that's definitely the hardest thing to do as well. So you rather like to handle lower difficulties first, rather than getting and jumping into the cliff, and jumping from a cliff. So in here, what you do is when you highlight a trend, just like one could be actually having setting itself in here, we can't see no breakout in here. It's hard to say if we managed an accumulation in here, but anyway, we can see that afterwards prices have been trending, all right? The trend channel is contracting and prices like dancing with the resisting context. So it's not a very fancy breakout we had in here, but still we can see the market has somehow moved up. I would say that's not necessarily a huge trend, but still a trend. So when a trend is setting itself, remember that, all right, trends follow sets of rules that you need to know, but you don't trade them, all right? Needs an accumulation out of a range, all right? So we've got the range. So I would say it's probably a trend on the lower time frame that we've got in here. What you're looking forward for afterwards is divergence, pullback, final excess, all right? You're looking at patterns that you can recognize. When you can recognize those patterns, you'll eventually be right or wrong afterwards. That's not really the point. It's just that you're following rules. And as you do this, you're starting to build your safe grounds. That's what you do. You can see this could possibly have been an accumulation. This could have been a breakout. This is definitely a divergence. And this could be the pullback. Remember the rules for the pullback. We need to dip below 50% of the context. Most of the time we reach out to the opposite context, but sometimes we don't, all right? You must see ranging context alerts and stuff like that. So this is definitely a pullback in here. And so though this is not the strongest trend we could have had, but there was a trend, it pushed to divergence, made its pullback, and made its final excess. All right, so this could have been a potential final excess, but remember final excesses has to overcome context. So we should have gotten there, not there. So where is your final excess though? If it wasn't there, then it's there, pure and simply. So it's just that was a wrong pullback. The pullback actually occurred in here. So this is what your market has been doing. Breakout, divergence, pullback, final excess. All right? Though all you care about is that right now, final excess is probably there. When do you actually confirm that it's there? All right, let's move on. Let's move back in time, actually. Let's go there, right? So, like I said, back in those days, in here, you could have figured it out to be the final excess. All right, so, sorry, let's move in here, actually. Damn it. Oh, all right. All right. So, you never know what actually the context is. You just need to figure it out to guess. All right, that's a guessing, but the sets of rules I give you are there to limit your personal biases and your personal guessings out of what a professional does. All right, I've just been simply thinking about what I do and what are the rules I do follow myself to just put them black and white through text, so through things you can understand. Though I told you the final excess is appearing after a pullback, so you need to have that pullback. All right, in here is a potential pullback, so this could be a potential final excess. You've got early ranging signals that all confirms that your trend possibly is nearing its end in here. Though you can confirm that the market has been final excessing when it's reaching out to the opposite context. So in here, right now, you do have something to deal with that market. You can say, all right, this trend is eventually terminated, though I'm going to look forward for my range trade. Your range trade is when the market terminates its trend or possibly terminates it and goes from context to context, which means, remember what I generally tell you, first range boundary, second range boundary, you're going to look forward for the third. That's pure and simply what you'll be doing. So in here we've got something to deal with. There is a potential range trade. Let's move on. All right, remember that anyway. What you have to do right here is put your alert. All right, though you can't do that in replay mode, but you'll put the context alert, the range context alert. All right, there you will be alerted. Range breakout, so it will give you an alert, and that simply confirms one more time what you somehow guess we're in a range context, and you're going to try profiting from this. Now the context has reversed. All right, you're waiting to get the Fibonacci's. All right, the market gets tried to dip below. Okay. All right, we still don't have our Fibonacci's, so we've got a problem. In here, either we're going to have to draw them manually, so let's do it. In here, the algorithm doesn't detect enough of a reversal, so let's draw them manually. All right, we could have a tradable area, a tradable cluster in here. So let's see if we do have something. All right, we're getting there. Oh, we're getting the price reversal. It's not that bad. Normally we should have overcome in the context, so we didn't, but we're close to. So let's have a look at the momentum. Now your momentum means something. So now put it up. Do we have something? Yes, though normally you take your trade. Your trade is an overbought cluster, right? So you're overbought with a lower high with a 76% fib. Though normally you can take that trade. In here, right at the candle close, you can take the trade. That doesn't mean it's going to work. And in here, you're in a dangerous context. You remember that. You know what happened, but in here there was a trade. You need to take it. All right. This is the width of the trend channel. So normally this is the size of your stop loss, which means in here, very, very risky trade, though very large stop loss. Your stop loss must be set approximately in here. Now let's see what happened. Oh man, it's gone pretty high. Alright, you also know your sets of rules, alright? Remember your piece of paper, you need to have printed that. Though on a neutral range you've got validation, and invalidation means accelerating throughout the trend channel with candle closes, which means we need to candle close above the trend channel. That's exactly what has happened in here. So just a few candles afterwards, we had invalidation alert. So now that you had that pullback, you've got multiple options. Number one, all right, the trade is too risky. All right, I just cancel it. All right, though what you do is you exit on pullback, you take a tiny loss, and here is no big deal. You take a tiny loss and you get out. Option number two, you've got a risk management. You've got a very large stop loss. Remember, your stop pretty much is 8,300. So your stop loss is very wide and very far. Though, this is just risk management, and you shouldn't nearly give a shit about this, all right? That's also an option. Either you take the risk, or you say, all right, maybe I took too much risk. I had my signals. It wasn't perfect. Remember that normally you need to trade on top of the resistant context. So you somehow bend the rules just a bit, but in here it's pretty close. Like, I mean, I would totally accept that. All right, though if you take that trade, you've got multiple options. Either you stay in and wait patiently, or you think that's enough, you took too much risk and you take a very tiny loss. All right, though moving on, as you know, you and I know what happened afterwards. All right, you know how these trades are meant to be managed. All right, so you got in here. Let's put the entry price. All right, so now it's been, sorry, you entered the 3rd of May. All right, god damn it, we're the 2nd of August. Oh man, and I still have, and I spent all the time negatively pricing that trade. So every day I've been seeing that trade as a negative red line on my account. So it probably pissed me off, but still, can you do something about it? Yes, the only thing you can do is exit the trade on a pullback. All right, if you think it's never going to make it, then you get it out, or you just say, all right, that's the typical risk management. I'm not there to catch the market up. I'm just there to find suitable risk management in here. All right, the market was volatile, reason why you had a very large trend channel, reason why you put it at large stop loss as well. Though it's a very tiny position sizing, it's definitely not the kind of trade that's going to make you a billionaire, all right? You wait for just one thing, all right? The market showed sign of invalidation, so option number one, you invalidate, all right? You don't wait for the stop loss, you invalidate the trade. Option number two, you say, all right, I've got a stop loss, so it's stop loss or nothing. That's two choices. You're free to choose whichever you want. Both follow the strategy. In here, you had reasons to get out. The market showed you invalidation levels, clear invalidation signals, by closing outside the context, the trend channel and accelerating it. You see the trend channel accelerating. That's a sign of invalidation, all right? But that's not subjective analysis. It's not you guessing that the market doesn't, that the trade doesn't go well. The trade, objectively speaking, doesn't do well. We're not supposed to accelerate throughout the trend channel, all right? But anyway, as you took the trade, let's assume you decided to keep the stop loss and wait, all right? What do you wait for? What are the possible options? Stop loss, which is price invalidation, or validation, which is reaching out the opposite trend channel. So in here, you just got validated. Clap, clap. You've been patient. Finally, your trade is turning positive, and it is about time for you to generally risk manage. As this is your entry price, you're not going to risk manage a shit, because the only thing you can do in here is either exiting the trade or you're not going to partial profit take. There are no profits to take. All right. So in those contexts, you know the rules. Either you shift the decision-making process one step further, which means your validation will be done at the confirmation stage, which is reaching out 50% context with candle closes. All right? So 50% context is in here. Though in here, like I said, either you quit the trade, you said, all right, too much waiting, and we had an invalidation, so I get out. But I would say that's not necessarily the wisest thing to do. Do you have trending signals in here? Your there are some actually. Though, like I said, either you buy the trend channel in here, means that you simply just get out with your trade, or you play that squeeze. Though that's a choice for you to make, pure and simply. All right. There are no good and bad answers. You had invalidation signals, so if you want to get out of these trades, they're totally justifiable. If you don't want to get out of these trades and play the range, this is totally true to do as well. You've got a stop loss to do so. But anyway, at that stage, remember that we've reached out validation, so even if you don't like it, at that point, sorry. So, like I said, multiple choices in here. Either you decide to invalidate this trade, you can do so, or you can just let it go and understand one thing. And I think that's definitely what you guys should do. Because when you're beginning, you're going to have multiple biases that you're going to get to fight over time. All right, like I said, it's not something that you can switch on and off. It's something that requires time to work differently inside your brains. So you're going to seek for control. Remember, that's the major problem that leads you to very bad decision-making processes. And even if in here you've got rational decision-making issues that can lead you to exit that trade, I'll suggest that in those contexts you take the risk for a simple reason. If it ends badly, all right, like let's assume that we go in here and the next move is bam, we go straight in here to 8,200. Then what you're going to say is, damn it, I should have exited the trade earlier. Yes, you could have done that, but anyway, in the process, you've learned something. You've learned to manage negative emotions, and that's really great because, once again, this is what's going to make you progress into trading. Learn to manage those things. You had a choice. You made your choice. What happened next is none of your concern. It's the market's decision. Can the market go higher and take you down at 8,200? Yes, it can. All right? But anyway, at that stage, I suggest reaching out validation. You should just reduce your risk. You just shrink the risk halfway through. So right now the market has two choices. Either it goes there, you're out, it makes new highs, and that could be the sign of a trend reactivation, or the market just fucks all the bulls, gets straight to your target, and you get your profit. And even if the lifetime of your trade has been 90% negative, if just the latest 10% gets positive and brings you the reward, that's how it's going to be. Do you actually care about how much time you get to oscillate or being priced negative or whatever? No, you don't. All you care about is freaking risk management. All right, that's simple as that. In here, you had not the best risk management, as you were basically risking as much as you were expecting to get. Though that were definitely not the best case scenario. All right, so let's play it a little bit further, because in here that's a little bit cheated some way, because we know what the hell. Sorry, wrong button. You know what the hell happened afterwards. So yeah, I don't like that, but it's a little bit cheated. We know it's been going to your profit taking. All right, there, nice. Your profit taking, end of the story. That's it. All right, so obviously we should have readjusted our Fibonacci clusters. Bang, end of the story. Profit taken, and like I said, probably 1/3 of this trend lifetime has been negative or hesitating or whatever. But still, the end is that you got patient, you done your job, and you got your profits. It's simple as that. And if you get to that lesson, getting that you don't control any fucking thing, that it's not about controlling, it's just about having a set of rules, waiting for them to be playable, and play. And it's just about it. Are you going to catch the market top or you catch the market bottom? Who gives a shit? All you care about is not being stopped out and reached out to your stop loss instead. Most of the time, this will play accordingly in ranges. Is this going to play perfectly, like the market doing this? Yes, sometimes it will. It's going to be pleasant because you got instant reward and it brings a lot of confidence and great. Still, what teaches you the most is when it doesn't go according to the plan, but not enough to stop you out. It's just, it forces you to feel things. Am I right? Am I wrong? Should I exit the trade? Should I let it open? God damn it, it takes so long to validate. That's great. That's exactly what you need to practice from. Because this is really teaching you what trading is about. Destroying all those stupid thinking, all those gut trading decisions that you could make in the process. You're probably going to make some at some point because you're not perfect. And don't seek perfection. Just say, all right, all those negative emotions, I'm learning how to handle them. Just a bit. These are the natural noob biases that you're going to need to fight. Do I need to act? Yes or no? This is definitely not the psychological management in which we're talking into the psychological shows, in which these are the things I teach to the yellow guys. All right, how to handle risk management stuff and stuff like that, and getting better at psychology. What we're talking about in here is the new biases, right? The things that everyone have and you can rapidly destroy. It's just you need to stop seeking control. It's all about it. It's not going to go according to your plan. Like most of the time, it just won't be playing simple. It's going to be complicated. But anyway, you've got your sets of rules that basically surrounds you and provide a positive reward. So if you can just trust them blindly at some point, it's somehow this. Yes, you might have to follow those rules, not questioning them, and just see for yourself. And you'll see that, yeah, play them, don't bend the rules, and you'll see. Out of 50 trades, it brings a bit of money. All right? If you don't do shit and mistakes in between, all right? Like I said, don't try to control prices. You're not here to catch the reversal. You're just here to find interesting, low-risk entries in the market, in which the market has better odds and chances to get to reach validation rather than your stop loss, all right? Invalidation is just an alert. It's something that allows you to exit the trade if you want to. But if it goes according to the plan, you just let it go. All right, let's take another example now. This was a typical third range boundary, but in here, we made a new historical highs in the meantime. So maybe we got it wrong with the previous context. So in here, what didn't play according to a plan? Probably because we misinterpreted, we've been misled with the context illustration in here. Actually, this wasn't the final excess. This probably was it, all right? So this might have just been the pullback we thought was there, all right? We thought it's a tiny pullback, but still it's a probable pullback anyway, all right? Remember that we don't know for sure. We don't know shit. We just assess. and risk limit. So in here could have been a pullback, yes. So this could have been a final excess. So we could have taken our range trade in here if we had signal. We had signals, not perfectly as we should have got right on top of context, and we barely did it. All right, we took the risk, took the trade. It still provided the gain, even if we were probably wrong. And this is probably where the final excess is setting itself. But what does that mean? That means you've got another range trade to do. You might have tried this one in a wrong context, but still it worked out, all right? But now you've got final excess, all right? Pull back. So what's there? Probably another range trade, don't you think? So it's first range boundary, second range boundary. You always count out of the current market top. Now we have a market that might have made a final excess. It's going from context to context. So there's another range trade to show up in here. And we just wait for it as well. So now in here, what do? You wait for another opportunity. All right. We wait. All right. The market is trying to trend, but as you can see, anytime it tries to, we'll see. If it accelerates in here, means we're bearish trending, all right? If it reverses in here, means we're in a fucking range. The market tries to trend, and it fails. And what happens? Oh, big surprise, the market fails to trend. So, range. Now you can confirm that you're in a range, all right? You've got signals. The market tried to trend break. It failed. So we're in a fucking range, though you can apply your range strategy. So what are the sets of rules? All right. Remember, that's always the same. That's simple, and that's why it has to be. It can't be any different than that. So in here, let's put our fibs. The automatic Fibonacci's will update just later on. Normally they should have done that already. That's weird. Oh, they did. Sorry, you can see there's the no. What the hell? Oh yeah, I'm sorry. My bad. I just turned down all the intermediate Fibonacci's in this thing, so you just see the 676 and 23. So the 76 is there. That's the one you care about, all right? So let's just put our arrows. So this is where you want to trade, and you want to be above context, all right? So right now, all you can tell is that you've got a range target. Normally, it's going to block prices for approximately 30 to 40 bars. So normally, prices will hesitate in here and then try to get to your target. That's what's suggested. You don't know shit. And anyway, you don't nearly care about that, all right? Remember that when you put your range alert, when you say alert, although we count, and range alert, you're going to receive a notification for this thing. It tells you, all right, you're in a range. We're probably going to block prices in here for a bit, but probably going to go further afterwards. What happens? Exactly what I told you. We lateralize for 30 bars, and we rise up again. All right, it's starting to be interesting. Are we soon going to get to this 76% fib? Damn, it takes so long. As you can see, patience. Your 76% fib is in here, not there. All right, so you wait. Yeah, I know, it might sound endless pain, but that's how it is, all right? In here, you had a cluster. You knew that if prices were going there, you would have traded them, but they didn't, all right? So you're still waiting. You've got another alert in here. So for now, you're just waiting, all right? It still hasn't been crossing the fucking 76% fib. So you wait for this, all right? And as you can see, it takes a freaking long time to play. I would say in here, if you manage to have a signal, at some point that can be an interesting trade to take, but you've got no signals. But it suggests the market in here is blocked. It might try to go there, but apparently it can't. In here, you're supposed to be blocked for 30 bars. I don't think the market can be blocked for that long. Though in here, we try to break through, we get to our trading area, and that's exactly what we want. You've got no signals, you can't trade, all right? You can't really risk manage in here. It's really too tough, though you've got everything you need, all right? But remember the sets of rules are pure and simple. Take your paper, all right? 76% Fibonacci retracement, so entry conditions for a neutral range, all right? 76% Fibonacci, overcoming the context, and signal plus triangle. Though in here, you are on top of 76, on top of the resistance context, you do have a triangle, but you have no signals. So, multiple options. Either you are more experienced traders and you know that this is good enough, but risky, though you're going to narrow the position sizing because you're trading without signals. You narrow the position sizing and you double the stop loss. That's one of the options, but that's the things I teach to the yellow guys, not you. So in here, no rules, no fucking trade. It's simple as that. Though you wait for better risk management. Sorry, I'm going to delete that. All right. Oh, something interesting. We try to break out. All right. Remember that the last time we tried as well, it ended up reversing. So we tried to break up. That's great. And we've got an overbought context. And you can see that a sine wave has been terminating its oscillation. So that's great. In here is definitely where you want to sell. There is a problem in here. It's something I just fixed with the indicator as well. I just discovered it with the French users. This shouldn't have been triggering a triangle in here. This is definitely not a reversal candle. All right, it shouldn't be doing any such thing. The problem is there is a safety algorithm with those triangles that just prevents another triangle to plot from 7 bar. All right, so this one, 1, 2, 3, 4, 5. All right, so the next candle, which actually turns out to be the reversal candle, can't show a triangle simply because this one showed up earlier. So that's an update. All right, I've been updating this just to show you how it works. All right, simple rules. So I'm going to give you the backs. You're going to see how it works. All right, give me a. All right, so I'm hiding most of the card obviously, but this is the code line that decides if there is a buying signal or a sell signal, the triangles. All right, so I just added this simple set of rules and you'll see how it does. All right, it's just a simple protection. All right. And in here, magic, all right? This is the previous version, all right? This is the new version, no triangle, and bam, magic. You've got your signal in here, all right? So that's just a mistake of coding. This should nearly have happened, all right? But like I told you, I'm making those tools better as they go because I see mistakes, I correct those mistakes and stuff like that, all right? So in here, you should have had your signal, your trading signal is in here. This is where you get in, all right? You start to trade in there, and this is where you take your trade. Though I'm going to update framework in the next couple of days, I'm just making a lot of those tiny adjustments as I go, all right? And I make it public, not just when I make a simple change, all right? I'm going to wait for another set of changes to have this is called like a bug edition more than anything else, all right? Remember that those arrows, those stuff like that, they're no magical tools. They're just representing something I use, but something that is pretty abstract to you guys, something you don't know because I've been learning that shit for 8 to 10 years. So I'm just trying to make my personal processes rational and understandable by a computer, all right? So when I see something that shows up but doesn't reflect what I think, I just add new rules. It's simple as that. It's the safety procedures that prevent some signals from showing up. So just these two sets of new conditions, which basically now I want an open on top of the moving average, which is not the case in here, or I want the high to be on top of the resisting context. That's simple as that. That's what it says. All right? Anyway, let's move on. All right, let's restore the previous version. And let's keep on going. Let's find another example. We're 38 minutes in, so we're not going to go any further than that. So this is where you'll take your trade. All right? You get in, and what do you do next? The same old shitty stuff. All right? Which means, let me delete that. All right, so you got in bearish. All right. Where is your stop loss? All right, you take this. You take the trend channel size and you put it on top of the market top. So this is where your stop loss is. You need to verify another final thing first. All right, you put your fucking Fibonacci's. Though it's in here, it's already plotted. All right. So this is where your profit taking is. You obviously make sure that the stop loss isn't bigger than the profit taking. Otherwise, it doesn't nearly worth the trade. All right. So this is your target. All right. though in here your stop is appropriate, you just wait. What's the next step? As you've done that, your trade is placed, though the market will be the decider in here. You have nothing else to do. Multiple options. Piece of paper. Validation. Reach out to the opposite trend channel to validate the trade. So, next step, either we go here, all right, or invalidation, reaching out, accelerate throughout the trend channel with candle closes. So option number 2, we go there and we accelerate throughout the trend channel. So let's figure out which one is the good one. Right, you've been validated. Great. All right, so validation in here, which means what do you do? Multiple options. Like I said, it's no subjective, it's just all written down, so I can't make it any simpler. If you're very aggressive, you do shit. If you're aggressive, you put stop loss at break even. If you're moderate, you take profit 25%, you pay for your stop loss. If you're very, very less aggressive, if you're very low risk, you take 50% and you pay for your fucking stop loss. It's simple as that. All right? I personally will do something in between, like not very aggressive, but not aggressive either. I'll just put my stop loss in here. That's what I generally do with those types of trades. All right, so in here, that's what I do. I just reduce the stop loss and keep the entire position open. The next step is another set of 2 choices. All right, think about it like branches of decision making. All right, you get there and you've got 2 options. Either something happens or either another thing happens. And after that thing happened, you'll get to another set of 2 choices. All right, that's simple as that. That's how it goes. You take your trade, it invalidates or it validates. As it's validated, either it gets confirmed or invalidated, all right? And as it has been confirmed, you get another set of 2 choices. Either you go stop loss after being confirmed, which is rarely going to happen, but still, that may happen, or you get finally fucking profit taken. And that's simple as that. That's how a range trading decision-making process behaves. If you do it any different, and you're just not doing rational. These are the only choices you'll have to figure out. As you got in, there are just 3 choices, and you can't make any of them. The market will make them for you. Is the market reaching out in validation or validation? As it's been validated, is it going back to take down your stop loss, or is it going confirmation? As it's gone confirmation, is it going to go to your taking profit or going to take down your stop loss first? These are the 3 market choices, all right? So, pure and simply, that's what you do. You've got your 76% fib in here. All right, candle closes below the 50% context, you're now fucking confirmed. So what do? You take your piece of paper, either you're taking profit 25% and put the stop loss at break even, you take profit 50%, 25% stop loss at break even, or stop loss at break even. But anyway, at this stage, everyone has to be stop at break even. That's all that matters. At this stage, in a confirmation stage, you must not lose a cent if the market goes wrong. All right? So in here, you're fine. The trade is finally fucking confirmed, though there's only one thing left to come. Your profit taking or your stop loss. It's binary, all right? But anyway, if you make yourself crazy about this, then you're not trading, because you shouldn't nearly be stressed out with this. You don't know anything about what's going to happen. It's nothing like you that you're going to be that's going to be making that choice. The market will make the decision. It'll go either there or there, but that's not anything like you should be concerned about. At that stage, you've just done one thing, trading. You've been risk managing, no more, no less. You don't figure out where the market goes, you don't figure out how it should do things, you're not there counting sub-fucking waves with Elliott waves or whatever shit you might have learned before. You're just risk managing in a range. And yes, that might sound stupid and simple and things like that. Then just do it. It's not that simple, because more than anything else, you're going to have to figure out the context and you're going to make mistakes. So you're going to have to learn to not making those mistakes again, to clearly identify those range contexts and risk manage those trades accordingly. But as you will have learned that, you'll become green. Simple as that, which means you'll figure out how this fucking strategy works, that it's not Elliott wave, it's not RSI, it's not the context channels that does the job. It's the mix of those shit. And the set of rules that have been made by professionals and that you're using as well, right? It means you do the same shit as I do. That's exactly this. You'll start dipping a toe into trading by doing this. That's just an entry door, right? You're just getting into trading. It's the early entry. Like I said, you just got your solid ground basis and you still have a fucking house to build. And it's a long process. You get from white to green. As you get green, you're going to start trading trending ranges. You're going to start profiting from trends and stuff like that. But at the beginning, you need to master ranges. Then you're going to start mastering breakouts, trend breakouts. These are the stuff I teach to the green guys. So we'll talk about this on the next podcast, as the next podcast for intermediates will probably be about trend trades. All right, but remember that you need to have a step-by-step process to progress. You don't go from white to orange, you go from white to green. When you're green, you start to learn a little bit more difficult trades to take. When you learned a little bit more difficult trades and you can handle them, then you start to learn to shape your psychology, to handle those riskier trades and to manage those risks accordingly. You start taking average trades, not perfect, things that are like you don't get the full set of signals. You get partial signals and you can still take the trade, but with an appropriate risk management. That's what I teach to the yellow guys. And then the orange guys just make it personal, right? Like they switching to Bollinger Bands or whatever shit that is. Right? It's just you make it personal anyway in the end. So anyway, that's it for today, more than enough. So I wish you guys a pleasant week. I'll see you again next week, because at that stage, all you have to care about is eventually looking out for the educational content video tomorrow, and Thursday and Friday are not meant for you. So if you're beginners, then see you tomorrow and then next Monday, all right? You've got 3 podcasts to look forward for over the week, Monday, Tuesday, and Thursday, and Wednesday, and then you're done. Thursday and Friday, not for you. All right, and please follow that. It's simple as that. All right, the more you look doesn't make you better. All right.